American Express stock, ticker symbol AXP. This stock is up 11% year to date, underperforming the overall market. On the 21st of July, AXP presented quarter results where they beat on EPS but missed on revenue. For the upcoming earnings, analysts have a mixed feeling. And people love American Express stock because of multiple reasons. One of them being the dividend, and I understand why, with dividend yield at 1.47% and dividend growth of almost 10%. So could this be the perfect moment to buy AXP stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does American Express do? American Express provides consumers and business charge and credit card payment products. The company also operates a highly profitable merchant payment network. If we dive in the most recent earnings report, we see that AXP reported revenue of 15 billion, up 12% year over year. Net income was reported at 2.1 billion, up 11% year over year. EPS is also up 12% year over year, which is very nice. They have bought back a decent amount of shares, so that is why this number is different. In here we see the total network volume growth numbers. It is slowing down a bit most recently, which is something to keep your eye on, but 9% reported in the most recent quarter is still a decent number. In here we see that Gen X is the core audience. They are still growing at a decent 8% year over year. But Millennial and Gen Z are really taking off with 31% growth year over year. Another interesting graph to me is the net card fees growth. In here we see that growth is slowing down a bit, so definitely keep an eye on this number as well. The last thing that I want to share is the 2023 and 2024 guidance. It is expected that revenue will see a 15 to 17% increase year over year, which is very nice. EPS is like to be reported in the range of $11 to $11.4, which is also very nice. For 2024, it is expected that revenue growth is in excess of 10%, which is pretty good in my opinion. EPS growth is also mid-teens, again looking pretty solid. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. American Express is a 121 billion market cap company. PE ratio is at 16, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for AXP stock, so make sure to watch until the end. Because PE ratio is only telling a small part of the full story here. Revenue is at 56 billion and in this graph we see that revenue went up in the long run. There is a decrease in revenue during the lockdown periods, but after that things were increasing again. And the recent increases are way higher versus historical numbers, which is very interesting. Over a longer period of time, margins are going up and down quite a lot. And ever since 2022, things are decreasing pretty heavy. So this is something to keep your eye on. EPS is following the same pattern as the margins, but it is a little bit steadier, I would say. Analysts expect double-digit growth in EPS in the coming years for American Express, which is very nice. For the revenue, it is a pretty similar but with slower numbers. It is expected to see high single-digit growth in the coming years. Return on assets is sitting at 4.7%, which is a low number. Return on equity looks really good at 29%. And the most important number, return on invested capital, is sitting at 5%, which is also a low number, but it is slightly higher versus the 5-year average, which is very nice. Current ratio is at 1.59, which is looking pretty good. It is pretty decreasing over a longer period of time, which is also very nice. Right now, American Express has 48 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. American Express has 41 billion in total cash, so they can pay almost all of their debt off, which is very nice. To me, this looks pretty impressive. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.47%, which is a decent number. Annual payout is at $2.4 and payout ratio is at 23%. I prefer 50% or lower, so right now they have 77% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 10%, which is a great number. And they increased the dividends for 1 year, which is kinda nice. And if you take a look at these numbers, the dividends paid since 2012, you see that American Express did increase the dividends at a decent rate. In 2021 they didn't do an increase because of lockdown periods, but right now they are increasing the dividends again, which is very nice. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is kinda steady. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at slightly higher growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare AXP stock with the overall market, in this case the S&P 500. Next to that I added two competitors, MasterCard and Visa. On the 5-year chart we see that AXP slightly underperformed the S&P 500. In total, AXP returned 60% including dividends, versus the S&P 500 sitting at 67%. MasterCard had the highest return with 95%. On the 1-year chart it looks pretty different, with the S&P 500 returning 16% including dividends, versus AXP returning 6% including dividends. MasterCard had again the highest return. On the 6-month chart it is a pretty similar story, with the S&P 500 beating AXP again and MasterCard having the highest return once more. On the 1-month chart it is finally AXP beating the S&P 500, but not by any significant numbers. MasterCard had the highest return again. So bottom line, AXP was beaten by the S&P 500 in the long run, and in the short run it doesn't look that great either. So could this be the perfect time to buy AXP stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 12, 13 and 14%. And for the free cash flow margin I'm putting in 20, 21 and 22. For the PE ratio I'm putting in 16, 17 and 18. There is still a decent amount of growth, and in some areas they do have a moat in my opinion. For the price to free cash flow I'm putting in 8, 9 and 10. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now AXP stock is at $163. I hit analyze and we see a lot of green numbers. We have a low price target of $143 to $170. We have a mid price target of $185 to $214. And we have a high price target of $240 to $270. To me, the mid price target is the most justified here, indicating that this stock is undervalued by a decent amount. My final conclusion on this stock is that I really like the business. As of right now, I do own Visa stock, and I started to check this company after watching some other YouTubers talking about them. There is still a lot of room to grow the business, which is very nice. Most fundamentals look good and they don't seem overvalued like similar companies. Dividends also look pretty interesting, but maybe it would be nice to see higher growth numbers there. For now, I'm adding them to my buy list, and probably when I'm opening my position very soon. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.